Hey everyone, and welcome back to the channel. In today's video, we're discussing everything to do with the markets this week, including 5 things to watch when the Federal Reserve announces its policy decision this Wednesday. There's a lot going on in the markets right now, increased volatility, but what might surprise you the most is actually which sectors are performing the best and the current rotation that we're seeing going on in the markets as of this month so far. Stay tuned, guys. There's plenty to discuss. See you soon. All right, guys, well, before we get into our crypto market discussion, stock market discussion, and of course, commodities discussion for the current markets around the world, let's talk about this Fed Wednesday statement. Of course, there's so many people looking at this. We have people talking about whether the tapering will be increased and be sped up. We've got people talking about forecasts for 2022 and the all-important transitory. That is now not in the Fed's vocabulary. Taken out, that word is, and replaced with, yes, we're concerned a little bit about inflation. Now, overall, what does this all mean? It really just means this word here. How many rate hikes will there be in 2022? 2022 is going to be the year of interest rates. We've seen 2021 be the discussion of inflation. Now it's going to be the discussion of interest rates. And I don't tend to think this is going to be a big problem because the Fed will push both ways on how many times they want to raise rates or not raise rates. I still don't think inflation is going to get out of control. We can see that in the 10-year yield right now. It's not exactly going mental or up too high, which is showing that maybe it isn't out of control as much as people thought. And I think this is the discussion. So how many rate hikes? We saw in the Bloomberg terminal a few weeks ago, they were pricing in 3 times rate hikes for 2022. So around that 2 to 3 times is what most people expect. And now we're discussing this idea of 9 rate hikes coming into the end of 2024. So just remember, this is what the market expects. It's when it has something different to this is when we got to be thinking about trouble. But let's get into what actually happened on the Monday close. So first up, the S&P 500 large companies. What was doing well? What was doing poorly? Well, it wasn't all bad, although it looks bad because, of course, the Nasdaq was down. The big tech stocks took a dive. NVDA 6.75%, Tesla 5%, and Apple 2%. There were some bright lights. Consumer defensive, real estate, healthcare. They all did a lot better through the session. So it wasn't a tale of all the markets. It was a tale of certain sectors in the market, and we'll get into that discussion right now. So first up, let's discuss the indices. Of course, IWM, the Russell 2000, just having another shocking day. We'll take a look at that later. Nasdaq 1.53%, but the all-important S&P 500 was only down 0.91, and it came straight into a level of support that we'll discuss soon. The other thing was the sectors, as we mentioned, XLY, consumer discretionary, XLE, energy. These sectors were down the most, and XLK, the all-important tech stocks, were down 1.49% over the general companies inside of them. Now, XLY is actually entering into a period of weakness, and actually XLK and XLY tend to do fairly poorly in December. These are 2 sectors that most people maybe often think will do well during the Christmas rush, but actually XLY, consumer discretionary, tends to do well October, November, and it did the same for, of course, 2021, as it does in most years, has a great October, November, and then weakens after that period. If we look on the positive side, we had our biotech out in front, but more interestingly was the consumer staples, the utilities, and of course, the healthcare sectors. And when we look at month to date here for these major indices and sectors, look at this. Consumer staples, utilities, healthcare, and real estate were actually the top 4. So contrary to popular belief, most people would think it was going to be probably technology that was out leading. It was actually the most disliked, or some of the most disliked sectors for the year so far, the utilities and the consumer staples. They do have decent seasonals around December, specifically the utilities sector. So while we don't like the utilities as it's more of a back end, more of a maybe 4 years after post-crisis when it gets really, really strong, this is a month of strength for utilities, and I think that's really showing through in this market right now. Some people also caution that as maybe the market is about to crash because, of course, the market is moving into defensive style sectors, but I'm not so sure that's going to happen, and we'll talk about that in just a few moments. Let's begin with our VIX discussion. This is the fear in the market right now. It did rise. We got above 20 again, 20.3, but we've dropped heavily from the 35 we saw only a week ago. So it still is stabilizing around this zone. Obviously, the more we get underneath 20, the more likely it is we return back to 15 and a normalized market. So we'll have to find out what happens into the quadruple witching hour this Friday, which is of course when all the options expire together, a volatile event, and also the FOMC press conference. Let's take a look at the PCC. So this is the put call ratios, and this still has a very high reading on it. We've got some options discussion later on in the video, but the PCC is incredibly high. And this really shows us this idea of when the puts are high, we don't tend to see crashes as much. When the puts are low and we have a huge amount of calls, that's when we usually sell off. So this PCC being so high still gives me confidence that while we dropped, there still should be a point where the bulls regain control and hopefully begin that idea of maybe a little bit of a push up into the end of the year. Remember, Santa hasn't technically come to town yet, and while the stats only show that the Santa rally is good for about 1 to 2%, it still is a statistical likelihood. So at this point, we're coming in 10 days plus worth of trading left here for Christmas rally, and that's where we should be looking at. DXY, let's talk about the dollar index. Dollar index did spike. We've got a key resistance around 96.50. We're looking for a breach of that zone. You'll notice there's a whole bunch of resistance wicks around here. It strengthened for the first time in a little while. It's found the support of the 20 moving average on the daily. And of course, if this breaches through, it probably will coincide with some weakness in the stock market as well. So a key level to be watching if you're a gold trader or if you're a stock market trader right now. US oil still remains pretty confident and pretty good overall. It is finding some buying pressure. We know the key level, this 73 is the key zone. Look at this resistance. 1 resistance, 2 resistance, 3 resistance, 4. Will the 5th resistance be the breakout? We're looking for that strength, and we've obviously got buying pressure around that 69.40 as well, should it get back down to there. So we've got great trap here on US oil and UK oil. Good zones. Key resistance next will be 75, and past that we could be looking at a very positive market for US oil. So it's one to watch, and we're keenly watching it this week. Let's move over to gold. Now gold has been, of course, incredibly lackluster so far in December. December tends to bring the bulls into gold. So far it has bought absolutely nothing. If we took the 1st of December, where are we? Around here. And then we looked at it right now, we're pretty much at the exact same price around 14 days in. But the signs of stabilization are there. Let's have a look at the daily chart. So the daily chart is kind of forming a little bit of a base here. I mean, if you took the bottom of the trend and you extrapolated that out, you would say, okay, it's trying to hold this particular trend line as best it can. It has found a lot of resistance, and look at this 1800 and 1810 level. The 1800 now is so stacked. We have a 20 moving average, the red line, a 200 moving average, the green line, and a 50 exponential moving average, all sitting around this exact same zone. Should we breach through that first? Will that be a positive sign? You would think yes, it would be a positive sign. The next step though is to get through that 1810. We've seen resistance over here on the left-hand side, resistance recently with some big sell-off wicks. And if we get past that, well, I think that's where the participation enters into gold. People start to get excited about gold and silver again, and it could be quite positive. So traders will be focusing on these levels this week. I think 1790, kind of 394, a big closure level indeed. 1810, a huge closure level. And this zone here will be what all eyes are on. And of course, we've been discussing this now for 2 weeks straight. So will it eventually hit? Hopefully it does. We'll find out. We'll be covering on this channel. So remember, subscribe if you enjoy our content so far. Let's move over to Tesla. So definitely lacking on Tesla in this day of trade. So we had that bullish hammer close on Friday. Day traders did not get the follow through. If you'd got the follow through, it would have been fantastic, wouldn't it? So this is the importance. You need that follow through to show the momentum of the trade. Remember, this confirmation, this momentum coming through the next day with a new peak off this previous high is what it takes to be a day trader. That's where you differentiate yourself from being successful to not successful. Just waiting for that little bit of confirmation. And while it's boring and it's hard to do so, because it's much easier just to slap that entry in around 1,000 and say, okay, I'm ready to buy. This is what you are looking for as a day trader. We didn't get it. We end up getting underneath 1,000, and that triggered some sell-off in Tesla. So the discussion point now begins, are we going back to one of 2 points? Are we going back to the 900, which is what we talked about in the weekend, this closure here being very significant towards that bearish side, the 900, maybe support there, or back to our very good trend line in the past, which will push us maybe into like an 850, 860 range. This is going to be a very big 24 hours for Tesla. I wonder whether it rallies back up, finds 1,000, and then sellers try to come back in on it. That could be a day trade strategy for some people around that $1,000. Even this little support, we breach that support, it's going to create, of course, a bit of a flash sell-off here that could occur. And we've been signaling this for a while with Tesla. We love Tesla around this zone. We love Tesla here. We love Tesla even more here. And of course, we got super excited about this breakout of 800 here. It rallied up, and now it tends to be kind of doing what it did last time, which is some consolidation, followed by some potential weakness. And then hopefully we start to create a base for Tesla's next cycle coming into the next earnings. Remember, the earnings is still 51 days away. So we've got plenty of price action in between now and then, and plenty of hype and of course FUD that will come out over that period of time. So we'll be watching Tesla every day. It's exciting to be underneath 1,000 just from the perspective of some increased volatility, some increased excitement, and of course opportunity. Another one that could be presenting some opportunity is kind of like the sister or the brother of Tesla. And it doesn't mean that it's necessarily the same industry, but what it is it's another one of those very heavily bought retail stocks that's rotated up heavily and it's consolidated. Now, it's at a very important zone. It's closed right at the previous support here on the 50 exponential moving average on the daily. Now, for some investors, they'll like this zone. They'll be saying, okay, cool, I'm getting a discount from the top here of around 23% on NVDA. That sounds pretty exciting, doesn't it? The problem with NVIDIA is that it does have this tendency to have big booms and then sideways action. Big booms, sideways action for quite some time. Remember, we boomed into September 2020 and then didn't actually breach really until 14th of April in 21. So it can sit around for a while after having a nice readjustment. And I think we need to remember where this stock's come from. It's come from $250 million valuation, upwards of $750+ billion, and we're back to $700 billion right now. So this is a big zone. We breached this level to the downside. It's similar to AMD where it's sitting on support. We could be looking all the way back down to 230. What do you guys think about that? What are your perspectives here on NVIDIA? Do you think NVIDIA bounces this zone, or do you think it's coming all the way back down to that 230 area? Let us know your thoughts. Let's take a look at the weekly as well, just to check that out. Weekly 20 sitting around 256. And of course, the 50 would be sitting around 230 should it come back down to that level. Long leg doji on the weekly. If we get underneath, decision made, maybe some further bearishness here. And that doesn't mean the rest of the market is stuffed or not doing well. It just means that it's a bit of consolidation on a stock that, while we love very much, has moved at an incredible rate. So it's now or never for this stock. Let's see if it can get it done. IWM, pretty disappointing, frankly. It's breached past the 220 and we never saw the lightning bolt. We never saw the double bottom. And again, this particular index shows us why we have to wait for the signal. It's a nasty, nasty, nasty thing. And it's got a false breakout on it that's occurred. We obviously have now the ability to recognize that when it comes down, you need to see that turning market. And then we had what looked like a really great double bottom, which is still in play. It breached up, found the resistance, previous resistance, and then now it's coming back down. We thought this level, there might be some interest. There wasn't. It's come back down. We're looking for a bounce. Let's hope IWM can do it. If it comes back down to the 212, 213, we still expect some kind of buyers to be here, but maybe this will form one of those giant double bottoms where we get a low, we get a retest, we get a movement up, and then if we breach that area, well, of course, everyone's very excited. But yeah, IWM, frankly, pretty disappointing. We need to have a little bit more information here, and we don't currently have any turnaround story. It really sucks, but that's what it is. Being a trader, sometimes it's sitting back, chilling, and waiting for the signal. And if you don't get it, what can you do? Let's move over to NDX. This is, of course, the Nasdaq. Nasdaq weakness was across the board. We do have maybe some support around that 16,000 level, which is only 82 points underneath where it closed. The Nasdaq, while it is weaker, is also entering into a bit of a month that isn't statistically great for it. Remember, Nasdaq does tend to actually weaken in that Feb-March period. So just like 2021, Feb and March will be something that we watch very closely on the Nasdaq. And it's had a good year. It's still looking all right, but I think the signal that's going to really push the markets is going to come from the S&P 500, and we'll look at that in just a second. So Nasdaq weakening here. If we go down to something like a 2-hour chart or a 1-hour chart, you'll notice that it's making kind of like a series of lower peaks, trying to maybe fill that gap. Remember, the gap goes down to around 15,900. I feel like there will be a lot of buyers in between this 16,000 to 16,050 zone. So even if it does come back down, there will be most likely some buyers around this area. There'll be buyers at the gap close. And in general, if you're somebody that's looking at this and saying, okay, cool, I'm interested in getting into the Nasdaq, you're always looking at that 38.2 to 50 fib pullback. This is where we're looking for the lightning bolt. This is where we're looking for that double bottom pattern. Any of those type of signals that show us there's accumulation, there's buying from Wall Street, there's buying from the hedge funds. That's where we want to be as much as possible. Now we come to the big one, the S&P 500. Where did it close? Is this scary yet? Is it scary in general? So I think we need to remember where we've come from. We've gone all the way down here to the top. We moved about 4.82% in a week. We're coming into the Fed statement, maybe some increased volatility, though we still think that they'll be generally positive on the markets just because they usually are, and that's the way it works out. It's a lot of fear that comes in here, but in general, the Fed has been positive and has ended up pushing the markets back up. So we have some consolidation at the peak. This is our resistance area that we're waiting to breach through. And we also have this opportunity for maybe a 38.2 fib pullback or a 50. Now, we discussed it last week a little bit, filling the gap. It becomes less and less and less likely, as we know statistically, the more time that goes on. But it's still statistically likely to try to fill the gap. If we close underneath this level or start to move underneath this support at around 466, you'll notice that 38.2 becomes open and that 50. Where does a lot of people like picking up stocks? Around this area. So we start to look at this area and look for the turnaround story. It still could be very positive. There's going to be buyers most likely around here. You'd think there's buyers around here at the 38.2, and there's probably buyers around that 50. So there's a lot of buying pressure at all of these key zones, which still remains one of the reasons why many people are positive on the market, plus the seasonality coming with Santa a little bit later on, should that hold up. So we've got the S&P 500, the SPY here at all these key zones. But there's another thing I want to bring up, and this is something we discuss quite a lot. How many puts are there in the market? How many people are making bearish bets coming into the quadruple witching event, the third week of course, December? Well, there's a lot of puts here that we saw open up for the 17th expiry. But take a look at how much extra puts have been put in over the last day of trade. We had a little bit of an increase here in puts coming in at that 460 strike, the 465 strike, even the 470 strike. So all of these strikes are starting to get loaded up a little bit by puts. And if they continue to load coming into the Friday session, let's say on Tuesday we see even more puts entered into the market, what does that create to a degree? Possibly some put walls. So this means that it's less likely that the market will actually fall underneath those zones as it comes through. This is something we watch all the time. It's a little bit more of an advanced technique. It's counterintuitive to what most people think, whereas if there's heaps of puts in the market, shouldn't it go down, Tom? Not necessarily. Remember, 70% of the time options expire worthless. And when we're starting to see a superior increase, let's say we see a monstrous increase in one of these strikes, that becomes a very good put wall. And we used the 450 put wall only a few weeks ago, literally a week ago, to kind of really give us confidence in that support zone for the SPY. And it turned out that, of course, it was correct. Sometimes it doesn't work. It's bringing it together with your TA. Your TA is first. Of course, your fundamentals, your knowledge of the market, your data in general comes second. And this is just that little bit of extra confidence. If you're looking at a zone, you say, okay, cool. That also agrees with me. It doesn't always have to, but if it does, hey, why not give you a little bit more confidence there? So we have seen an increase in puts around those strikes. SPX, it's the exact same thing. The only reason I'm bringing this one up is because we have the resistance, the resistance, the resistance, the resistance. We're still trapped in the same range. But I wanted to just talk about, yes, we've got the 38.2 and the 50 fib areas, which I think present very large support buying that could come through. But on top of that, if we do get, let's say, that movement up and breach of this resistance showing that we're ready for the next zone, we've got to remember that monthly R2 and also our longer term trend line. So if we put the trend line on the charts that's gone through all the previous highs so far, where would that extrapolate out to? Around that 4,800. So it's a very good target come Christmas, come all of those type of things. Very interesting zone, certainly something we're watching. Let's move over to the Bitcoin market. So we're still seeing Bitcoin shorts declining here. It's not like this is probably due to, this decline at the moment is due to something like the, let's say the whales getting involved. It's probably just a whole bunch of manipulation and FUD coming through, and we're still above 47,000. Now, what you'll notice is it's this daily 200 moving average that we're sitting on. 47,000, pretty key area. We've had a little bit of indecision here on the previous candle. We're holding as best we can around this zone. And what you need to see now, we really want to see a bull candle. Let's get a bull candle above 48, start some recovery here. If we end up being this is the base and we breach past 50 again, that's going to be a positive because a lot of people are going to start drawing this line. They're going to start saying, okay, we think the market's weakening here. We've got a line drawn through these previous peaks. We're going to try to sell it each time it comes up and push it down, basically creating a descending triangle. Now, we don't want that if you're a bull. So if it slaps that 50K and then even slaps the 52K, do you know how happy bulls should be? At that point, you're putting in like a triple base, a lot of accumulation, and hopefully we can see some volume, which already seems like there's a bit of trade going on here, a bit of transactional volume coming through each way. And if we get volume, it's going to be a beautiful accumulation base into a breach. So it's not all hope is lost here on the crypto market, though a lot of people are probably feeling that way. What is showing is that BTC is becoming the dominant player again, and Ethereum is weakening against it. If you look at the ETH-BTC ratio, we talked about this on the weekend, it seems to be the Bitcoin is holding better than Ethereum right now. And this is going to be the one that pushes the market should the market return. For bears of this, well, you just really need it back underneath 45.7. It does that. Back to 42 we go. And we'll find out in the next story. So hopefully it starts to increase and it's looking all right. Calendar news events, we do have some information. We've got the PPI, 8:30 a.m. New York time. So remember that, Tuesday, December 14th. And then the big important one, Wednesday, December 15th. We have the FOMC statement, federal funds rate, press conference, all of that information coming out. And then later on the Friday, just remember that is quadruple witching hour event. We'll be talking about it very, very soon. Thursday could be set for some volatility as well. This is the markets right now. Get into them if you like them, but at the same time, this is one of those weeks that there could be some increased volatility and hopefully it all sorts itself out. We'll be optimistic for now. If you enjoy the channel, please remember to subscribe, smash that like button, guys, and let us know your thoughts on NVIDIA. Where do you think that thing's ending up at the end of the year? Is it going back up or is it going to get cracked and move underneath that support? Speak to you soon. Bye for now.